there's really four reasons why I think people should take it extremely seriously. And if they're in the financial industry, they should take it even more than extremely seriously. I think the first reason is that right now, DeFi fundamentally has much higher yield than traditional financial products. So if I take $1 and I put it into decentralized financial protocol like Aave, I can get anywhere from 7 to 10% annual APR on that dollar. If I go to a bank or another institution and I try to do that, I will get less than 1%. Now, that is a very powerful thing because fundamentally the global financial system is a great machine to find yield all over the world. And if the yield that's made available by DeFi remains high while the inflationary worries continue to grow, then I think people will actually see banks plugging themselves into DeFi protocols to give that yield to their user base. The second reason is around transparency. So transparency is not a very well understood dynamic in financial markets because it kind of has a seasonal value. When it's the boom season, it doesn't have much value because you don't really need transparency as far as everything's going well. I don't really need to check on the systems. It's really in the bust part of the seasonal trend that people begin to value transparency as a risk management tool. And if you look at the 2008 financial crisis, which is what gave birth to Bitcoin, you actually see the entire crisis being exacerbated to an extreme degree, primarily due to lack of transparency, primarily because people couldn't understand what the underlying value of their assets was.
Do you mean because of all the synthetics that were running around at 2007, 2008, 2009 that made it very hard for people to understand what was embedded in them?
It's not even the synthetics. The synthetics are an exacerbation of a problem around knowing what's going on. And when I say what's going on, it's that there were a select few groups of people in the financial market that were able to actually do the research to understand what the underlying value of the asset was. And the reason this was so unbelievably difficult is because of the opaqueness in the financial system, right? Because one bank would issue the loan, and then it would repackage it and give it to another bank, and then another bank would repackage it, give it to another bank. And basically, as that happens, information is lost because they're all on different systems and they're all functioning in this opaque system where nobody can really transfer much information, much less make that information available to the market. So instead of just saying, hey, this is all AAA, it's all fine, don't worry about it, you would actually be able to look at, let me click on the 9,057th person in that basket. Who is that? What is their credit score? What is their ability to maintain their capacity to repay the loan? And this is because the DeFi contracts are, once again, these smart contracts that are built on this inherently transparent blockchain system, right? And what that means is that you actually can't build them in an opaque way. You cannot build a smart contract in a way that hides the information that was hidden during the 2008 financial crisis. And so transparency, once again, is not as exciting in boom times, but it is critical in avoiding an exacerbation of the bust.
Right.
And I think that if we experience another bust, and if that bust is particularly sharp or fast or large, then the risk management and therefore the transparency properties of a blockchain as a way to understand your counterparty and as a way to understand the assets that you're actually getting involved with will become probably its most sought after feature.
So we talked about two of the four reasons why anyone should care about DeFi. The first was yield. The second was transparency. What's number three?
So the third one is actually control of assets. And this speaks to the Robinhood example. So in the Robinhood example, you gave your assets to a counterparty that could do whatever they want with it, and you had no insight into their code, right? So you didn't know under what conditions you could force them to give you your assets or you could force an action. And you don't know that because the entire Robinhood application, it's not a single piece of code, but it's a large collection of pieces of code, all of which are private from you, right? So you're basically trusting the brand to do what you hope it will do. And this, once again, is one of those capabilities that has a seasonal value to it. So there'll be these flash-in-the-pan failures when people realize that if only they actually had control over their assets, they would have avoided serious financial issues or serious economic issues or serious contractual issues.
Can you give me an example of that, Sergey?
Sure, absolutely. I think this example is actually one of the most useful examples to explain why Bitcoin is useful, aside from the value of a Bitcoin or what people think a Bitcoin is worth. And this is the fundamental value or the power of Bitcoin that attracted me to it initially. If you look a few years back, you'll see that in Greece, the ATMs were locked up. Mm-hmm. And whether you were an individual or a business, you could only withdraw 66 euros per day. Now, this came as a massive shock to, the vast majority of the people in Greece. And this was done for a number of, economic and other reasons. But there's a fundamental difference in having an asset with a counterparty that gives you a piece of paper that you hope they act on the way you want them to act, or having a cryptographic guarantee of control over something like a Bitcoin or another token, right? So if at that moment in time in Greece, you had that value in a cryptographically controlled token, whether that was a Bitcoin or some other token, or even a stable coin, you could immediately send a transaction that would move those assets in full. And once again, because the system is tamper-proof and immutable and outside of the control of any one participant in the system, nobody would be able to stop you. I think this aspect of control is not talked about very much, simply because people believe they already have it. So people believe that the amount of control that they have is at one very high level, but it's actually at a deceptively low level, but they're not aware of it because there's no reason to worry. I think, once again, as the reasons to worry materialize, and if they materialize in volume quickly, the ability to control your assets with a cryptographic mechanism is going to become the difference between having or not having assets.
So if the world falls apart, if there's some kind of extreme risk or calamity that affects the mainstream banking system, there is some resilience in the DeFi system.
I don't want the world to fall apart. I want the world to work properly by giving people the right information about their risks, by giving them control over their assets, and by allowing, a global market to give people, global access to all of this, regardless of their local legal system, right? But the reality is that what people think they have right now in terms of transparency, risk management, and control over their assets, and in fact, really, it comes down to their counterparty risk. The amount of counterparty risk that people think they have now is, in my opinion, orders of magnitude larger. And because, those risks simply aren't something that's presented to them. It's not in anybody's interest to present it to them. The counterparty's not going to present it to them because, they're not going to be able to give them an alternative. But the difference is that DeFi, once again, for the first time in history, you don't need to walk down the road and get another paper agreement with the same, brand-based guarantees. There now is an alternative.
What's your fourth reason why DeFi is going to be important?
People think they have what DeFi does, but they don't. So the fascinating thing to me is that if you go to any person and you ask them, look, if at the same cost and at the same speed, you were to have a more reliable agreement on the topic of your personal wealth, on the topic of some commercial wealth, would you take the more reliable agreement? Every single rational economic actor obviously says yes. And people think they already have this. So they already think they're already in a DeFi or smart contract powered world because it's in the interest of their counterparties to convince them of that. And so the reason it's difficult to explain to them that they need more reliability is that they think they already have it, but they don't have it. This is why I'm pretty much sure that all of this is actually going to be something that society as a whole demands.